Good morning. Today is Thursday, February the 2nd. The time right now in Singapore is 10:19 in the morning. And overnight on Wall Street, of course, we have the FOMC meeting. And as most people were expecting, the Federal Reserve actually hiked rates by a quarter point. This is the lowest it has ever hiked since middle of last year. Okay, so what we have seen, this is the third consecutive downgrade of the quantum of the rate hike from 75 basis point to December 50 basis point and now at 25 basis point. So there is a step down from the very aggressive rate hike of 75 basis point. So but most importantly, it's not the quantum of the rate hike because market already expected the Federal Reserve to hike by a quarter point. Okay, what is more important was that speech after the rate hike by the Federal Reserve Chairman, and the speech gave markets a idea that he is dovish, meaning to say that he is likely to ease off on further rate hikes, at least for now. And although he did not outright say that he's going to cut rates, but the market took it as good news, and that created a condition for equity markets to actually surge higher, and which is what it did here last night. Now, the Dow Jones actually did not quite manage to take out the January high, but it did flirt with the high, and the high traded was 34,334.7, which is a notch lower than the January high of 34,342.3. So although it did not quite manage to cross over, but the other equity index like the S&P 500, the Nasdaq 100, and the Russell 2000 all have managed to surge beyond the December high and the January high as well. So the laggard right now seems to be the Dow Jones itself. So this is quite telling. But by and large, you can see on a close-to-close basis, the closing of last night is actually one of the highest we have ever seen since the high traded in January, mid-January. So that laid the foundation for further surge going into tonight's session. But do be aware, the market right now is in that stage whereby it's a little bit euphoric. So there is always the danger of the market, not being able to maintain the momentum higher. So do watch out, okay? By and large, you can see S&P 500 has been very, very bullish. They take the market much, much higher to 4,148.95. And if you can compare this to where it was 4 months ago, this is the highest closing so far for the last 4 months. So that laid the foundation for another surge in the days ahead. The target right now is a 4,264.5. Okay, so where we are right now, the market needs to go up maybe another 100 over points for it to reach this intermediate point, because this is a three-wave rebound. Overall, the market is still bearish in my opinion, at least in the daily time frame. So this rebound from last October looks like it's unfolding very, very rapidly into a three-wave rebound. So I can only say that it's going to be a rebound for now, because unless otherwise proven otherwise, in the days ahead, in the months and in the weeks and months ahead, I can only assume that this is a technical rebound. So the danger right now is if the market continues to edge higher, this is the danger area. 4,370 to 4,530. So this is the danger, because this would mean the market will have rebounded in equality AB equal to CD, which is something that is very, very familiar to those who trade based on technical. Okay, AB equal to CD is a very, very common relationship and a pattern which signified the top or the bottom of a retracement, depending whether it's a downtrend or whether it's an uptrend. Okay, so do watch out as the market edge higher. Over in the Nasdaq 100, we can see that the market also managed to rebound, and this is unlike the S&P 500, we still have a bit of room to go and challenge the high into the equality range. The Nasdaq 100 is already in that range. Okay, so you can see that this is a rebound. Equality move will be at 12,400. Last night high was 12,458. So it definitely has already, technically speaking, has already hit its equality target. And if the market continues to edge higher into this bracket become an area of vulnerability. Okay, so do watch out for reaction inside this bracket of prices here between 12,400 to 12,900. Okay, do watch out for potential reversal. And of course, we have the September high at 12,740. So this will be a guide, okay, as to where the market can actually go to. Okay, well, over in Asia, we can see that the Hong Kong market actually opens on a high note, but as we are speaking right now, it seems to be pulling back. There is no very aggressive follow-through buying, although will be a perfect opportunity for the market to take this Hong Kong market even higher based on the very bullish closing in US equity, but that did not happen so far. Of course, we are very, very early in the morning. We still have another few more hours to go before the Hong Kong market closes. So there's always the possibility that maybe in the second half of the day, maybe the market will edge higher. But we can see that people in Hong Kong are getting a little bit cautious. Earlier on, it was a red color, now it turned into a green color. So it's quite amazing. So we can see that maybe it may still happen. Okay, buyers are coming back again in Hong Kong market as we are speaking. Over in the Shanghai Composite, we are also seeing something quite similar. Market have the great opportunity to actually edge higher. This is yesterday's price. Okay, you can see at the bottom of this move here there is a reversal pattern, and that coincides with the very strong closing on Wall Street. Now it gives the Chinese market an opportunity to take out the January high of 3,310, and if this is the case, the equality move here is at 3,375 to 3,470. So this is an area of vulnerability as we have the equality move here. Although the market right now, at least on the daily time frame, has turned decidedly bullish, but the pattern, if it's only an equality move, and if it cannot surge beyond that 3,470, then that means that there's underlying weakness here. Okay, so do watch out for this, especially if the Wall Street also hit equality. Over in the currency market, we can see the dollar overnight did not quite sustain its recent gain, and of course, if the Fed chairman gives the market the appearance that he's dovish, meaning to say that he's going to hold off on further rate hikes, that is definitely a negative for dollar, because if interest rates is likely to plateau, then of course there will be less incentive for people to push dollar higher. So you can see there was a massive unwinding on long dollar position. In fact, we are seeing evidence that there are sellers are coming back into the market, thinking that that will be a signal to sell the dollar going forward. And if you look at the dollar index, that appears to be the case, because even in the weekly time frame, it has turned negative. Okay, for the first time, it has turned negative. So we can say that based on this, maybe for what we know, the market may actually test 127.20 and maybe even take it much lower. Okay, over in the currencies, the euro versus the dollar have a major surge from 108 to 110.30. Okay, which is actually very strong, because I have been emphasizing the fact that for the euro dollar to cross and stay above 110 is going to be a major fit. And not only did it do it very well, it cut through a butter like a hot knife. It starts slice through 110 and stays above. So that actually gives the market a little bit of underpinning, but the danger lies tomorrow. So how it closes tonight and how it trades tomorrow is going to be key. Now, why tomorrow? Tomorrow we have non-farm payroll, so it could be the catalyst for the for this euro dollar to actually unwind. Okay, so if you do not want to follow this market higher from this current level onwards, maybe you want to do what I want to do, okay, which is tomorrow I'm going to look for opportunity to sell short the currencies, in particularly the euro, and I'm expecting a reversal tomorrow. Okay, so do watch out for the potential move here. Now, Aussie is in a space all by itself. Aussie has turned bullish, okay, and now it's at above $71.57. So we can see that this Aussie has been supported largely by this the surge in gold prices, and that is underpinning the Aussie dollars. After all, the Aussie dollars is closely correlated to the price of gold. If gold do well, then obviously it will also mean that it will support the Aussie dollars going higher. So that is underpinning the Aussie market here. This one is the only one that I was a bit disappointed, because I was thinking this one is going to come back down, but yesterday it also surged. Although I'm still in the game, I'm short the Kiwi with a very small position opening. I'm still very much in the game, and we'll see what happens. At most, I know this trade doesn't work out, I'll be stopped up, but it's okay with me. Okay, now over in the sterling. Now, when you compare the euro dollar chart and the sterling chart, euro dollar have a major surge from 1.08 to 110, whereas the sterling, you can see the market has been building a base at 122.70, 122.60, but it did not surge and take out the last month high of 124. 50. Okay, so by comparison, this is a weaker currency pair. So besides selling the euro, which I intend to do tomorrow, maybe a better candidate will be this, because the logic go like this. In supposedly bullish phase, any currency that cannot surge is definitely inherently weak. So what we want to do, we want to sell the weak and buy the strength. Okay, so in this case, by comparison with the euro dollar, the sterling versus the dollar definitely can be considered as the weaker of the two. So maybe it will give you more mileage if you, instead of selling the euro dollar, sell the sterling. Okay. Now, euro versus the Canadian yesterday actually collapsed below 133, which is which have been actually hold up very well throughout the last week or so. Okay, but yesterday, the market just sliced through 133 and went up to as low as 132.60 and then stays there. So again, it does looks bad for now, but overall this market is bullish. So I'm thinking if it can slide a little bit further to 132, okay, that maybe will be the good launch pad for another rally attempt in the dollar. Over in crude oil, we can see crude oil prices has actually backpedaled. It did very well going into the FOMC meeting, going up to a high of $79.73, but it all unraveled because the dollar is weak, or at least most analysts is contributing to the decline due to the softer dollar. And of course, the fact that the main catalyst for crude oil prices to slide back was the increase in inventory, especially in the States. This meaning to say that there's a lot more supply in the market, and that causes the crude oil prices to also come off. And not only did it come off in the crude oil, it also went down to a new low for natural gas. I was long going into the last night. Actually hold it for 2 days, thinking that it's going to be the base. But unfortunately, it did not. Market slide below my stop loss point and traded to a low of $2.46. And maybe it's just trying to find another bottom. I am still very keen to look for a bottom, and maybe the next bottom could be found at $2.46. We will see what happens. Okay, so this low here that I think have a good chance. Okay, $2.46. The last night low was $2.64. This one should be $2.46.3. Okay, so I think we are getting very, very close to a bottom. Okay, I'm still very keen to look for buying opportunity here. Now, this is something that I did right yesterday. Going to yesterday, especially after Tuesday's surge in prices from 1,900, I decided that this is all it can do. And during the phase when the market was consolidating, I actually took up a couple of buy positions here, and true to the expectation, market actually surged more than $21 last night in gold to a high of 1,957. Now this gold prices is likely to continue on this trajectory at least until next week. Now next week is going to be the danger period, because I do expect a bit of volatility to come in as the market goes into the second week of February. I think it will find it will exhaust itself, and I will be very keen to do counter trend, meaning to say I do expect a sizable correction coming in after the second week of which is next week. Okay, and this pullback, if it actually happens, may actually last more than a month, perhaps even 2 months. Okay, so over the next 2 months, I want to look for opportunity to see if I can hold on to a good sell position, and then my long-term plan is actually to go back and buy, because from the April low, we probably will see another surge going into June. Okay, probably a new high. So this is my game plan for precious metals, and I'm sitting pretty right now on gold. I also took up gold silver position yesterday during this consolidation phase in the morning, and I took out a couple of positions, and market actually surged to this morning high of $24.28, and this is already testing the last week high of $24.29. Okay, very, very, very close, and there's a very, very good chance it will take out $24.55 all the way to $26 over dollars. Okay, so there's a lot of potential for this market to go even higher. So I will use the gold scenario to time my exit in silver, and we'll see by then whether it is also appropriate to go short on silver as well. Okay, we'll have to look at the structure going into next week. So over in the digital asset space, we can see that the correlation between the US equity market and crypto space again come back into full display. Okay, we have seen since the start of 2023 in January, we can see that Nasdaq 100 has been taking the lead higher, and that also coincide with the bottoming out in the crypto market, and you can see Bitcoin has actually been charging higher up to this morning of 24,245. So we have to time this based on what we foresee in US equity market, in particularly the Nasdaq 100. So use that. I think the analysis for both these two can be used concurrently. Right now, we have see how far it can sustain. Okay. So far, it's looking very, very bullish. Ethereum also went up to a high of just under 1,700. It took out the January high of 1,680, and this is one of the more aggressive move because it has been lagging behind Bitcoin for quite some time now. So this morning, it decided to take off and take out the January high. Again, looks very, very positive for now. This one is not so positive. Okay, by comparison, whereas the Bitcoin and the Ethereum has actually taken out new highs for this year, we are still seeing that the Ripple is still lagging behind. We are nowhere near the January high of 0.433. So the best it could do was 0.442, not even 42, 4178. Okay, so this is definitely lagging behind. Cardano is the star performance here. Okay, like Bitcoin, it has been charging and charging higher, and this support line has been working amazingly well to show that the support is actually along this blue colored line, which is the support line. And this morning it went up to a high of 0.41. Now, yesterday high was 0.40, which is 40 cents. Okay, now we have add on another 10 cents to this move here. So it's approaching my immediate target of 0.413. So we'll see what the market will do near this price here. Okay. Solana did not mimic what we are seeing in Cardano. In fact, the market is respecting this previous support line, turn resistance line. Market pause is surge just under $25.80. And we can see that the market is definitely very aware of this line here and is respecting it. So from a technical standpoint, we can see that crypto actually can be traded very technically because it has no real fundamentals. Okay, so basically using technical analysis to trade crypto is actually quite viable because you can see that a simple support resistance line can work wonders. Okay, has been shown here. So if you have nothing else to use to trade crypto, maybe you can fall back on technical analysis using very simple tool. Okay, and for example like this. So in the meantime, do watch out. Today we have two central banks going to decide on interest rates. We have the Bank of Japan, Bank of England, likely to raise interest rates to 4%. And then of course the ECB, which is the European Central Bank, likely to move interest rate by another 50 basis point to 2.5. So we will have to see whether it comes out as expected. And of course, not forgetting tomorrow is the big one. Tomorrow is the non-farm payroll. So from now onwards until Friday closing, it's going to be super volatile and it's great for trading. So just be careful. In the meantime, this is all I have for you. I will see you again tomorrow. Bye-bye. Take care.